This channel is for educational purposes only. Please do your own due diligence before making any investment decisions.
Hi, everyone. This is Joe Rabil with Rabil Stock Research, and I'm going to do a market update here. What I've got on the left here are the market conditions, and I start at the bottom with the sentiment. The sentiment keeps moving higher. We're up to 40%, 47% more bulls than bears here. This is definitely in a danger zone. All right. Now, one thing you need to understand about sentiment numbers is they're not timing tools. They're conditions. All right. It's a condition that's out there that is a negative, it's a risk factor. And because the market is trading fairly well, especially on a short-term basis, it's quite possible that this sentiment doesn't really kick in until early next year. So you got to keep that in mind, especially there's just not that many trading days left in this calendar year. All right. Now the overbought oversold oscillator has popped back up to overbought. So both of those are negatives. So we're on the lookout for some kind of a reversal pullback decline. But again, because of the time of the year, it's possible that, maybe we get a little dip, but I'm thinking we could get a move back to the upside and finish the year on an up note rather than, selling off into the end of the year. I mean, it just had such a strong year. Here's how we opened right here. We opened right at this bar and have been trending to the upside. Haven't truly broken the 18-week this whole year. All right. So I think when we do break the 18-week, that'll be pretty meaningful. All right. Otherwise, we have trends monthly, weekly, and daily all positive. The momentum is positive for both the monthly and the daily, and the weekly is still neutral. I'm holding out on that because we're waiting for ADX to kick in. So I've got that in the neutral camp. Now, there was some improvement in the volatility. We've got a positive for the daily and neutral for weekly. I'll go into all that in a second. All right, so let's just start with the daily. We can clearly see the volatility has dropped on this time frame, on the daily time frame, and I think that's a very good sign for potential trading plays. I would like to see this pull back a little bit because it is overbought, and we're essentially overbought in both time frames. But on the weekly, we have turned down through the moving average, but it really isn't, it hasn't caused this to roll over. All right. So it is neutral because it's below the moving average, but it's still very early to determine whether it's flipping or not. The moving average slope is actually a lot more important than the line itself. All right. So we want to keep an eye on that over the next week or two. Let's go ahead and start going through the individual time frames. So we've got a strong trend. We had a pinch play to end 2023, right? And have basically just been straight up since then, just about. All right. So we've got really good momentum conditions on this monthly time frame. I don't see any real negatives. The negative has nothing to do with the momentum. It's the fact that we are getting stretched away from the 18-month line. So again, that will act like a leash. When you get too far away, it's going to pull you back, right? Now, but sometimes it'll linger, and then look at what happened when you flip into a new calendar year. Right. And we see that over and over again. So we just got to be aware that a lot of the corrections start, if you've been going up, they correct as you start a new calendar year. So I think that's what's going to make the most sense to me to be on the lookout for. All right. And then the one holdout in the momentum category is the fact that this DI cannot get through, cannot break out. Even though price has been going up, we're just not seeing the confirmation here. And it's taking so long to confirm that it probably will confirm, and it might get this to push up. But I think, we got to be very careful about thinking that confirmation is all that important. We're going to have to watch and see, because if the ADX just gets back up to the 25 line and we get some kind of a decline in price that breaks the 18-week, then we'll have a pretty significant divergence that I think will set the stage for a legitimate correction here. All right. So we've got to watch that really closely. But the reason why I don't think it's imminent is because we've got pretty good, solid action on the daily. And notice how small the bars are. You know, big bars are signs of distribution, right? I mean, when we get big bars, you should be looking or expecting volatility, reversal, stuff like that. But this is really quiet. There's no selling at all. You see how this red line is just dropping? That's the strength of the sellers, and it just keeps plummeting to the downside. So we're going to need a sign of sellers to show up. And again, I'm leaning towards that being probably next year. Now, we might get a little quick decline and then get our Santa Claus rally that brings it back up. Okay. So, you know, you got to be prepared for that, just because we've been going up, up, up and away. But at the same time, it doesn't look like anything significant right this second. And then if we look at the hourly chart, we've got a pretty nice trend since we've turned back up here in November. It's been higher highs and higher lows. Look at the parallel nature of the moving averages. Right now, this is what we call this sort of irregular pattern of MACD, where you got to be really careful. This is not, it looks like it's divergent, divergent, divergence. It's not. It's not really what's going on there. It's just, it broke through, and until it breaks the zero line, it's in an uptrend, and it's just not, divergence is broken in this. All right. And you're not going to be able to use divergence in this pattern right now, I don't think. Now, if we got the ADX to give a legitimate divergence, so that would mean we come down and then we go to another new high, and this is unable to get above 25, then I think we have something a lot more meaningful to be on the lookout for. But don't get too focused on this MACD. It doesn't look all that good, but I also don't think it's I don't think it's doing anything that's suggesting that it's about to rotate to the downside. All right. So stay focused on the weekly pattern, and really what we're looking for is a break of the 18-week. I think if we get a legitimate break of the 18-week, then I think that's where this sentiment problem really starts to play out. All right, because you know we're in a pretty high risk area when it comes to the sentiment, and you know it could set the stage for a pretty decent decline. All right, that's the update for the week. Let me know if you have any questions. Thanks.